This video is to go over Work Together 16-4 and show you guys, or let you follow along while we journalize closing entries together. So we do have 4 closing entries to do. The first one is to close the income statement accounts with credit balances, then we'll close income statement accounts with debit balances, then close income summary, and then finally close dividends. So the place we'll need to get most of this information is our trial balance. So let's get started. I should give credit where credit is due. This problem is from Century 21 Accounting by Gilbertson, Lehman and Gentene. So thank you to them for creating this fabulous text in this specific problem. First thing we'll do is put the date in, December 31st, and our first closing entry to close our income statement accounts with credit balances, which is your sales. It would also be, let's just look through here. Income statement accounts basically start here. Right. Oh, whoa. Got a little wild there. Sales and purchases discount and purchases returns and allowances. Those two both have, let's get our formatting. Both have credit balances, so we'll just put those amounts all in the debit column. You know, I'm going to type these because my formatting's getting messy from copying and pasting. Purchases discount, it looks like, is $737.71. And purchases, returns, and allowances, $1196.01. And let's see here, all the way down here, interest income also has a credit balance of $466.20. And all of those will be closed to income summary. And so income summary will be a credit for the sum of all of those. And by debiting all of these accounts with a credit balance, it will zero them out. Right? That is the purpose of this whole entry. 508,297.32 should be the credit to income summary. All right, next entry. We will go ahead and put a placeholder for income summary here. But now we're going to need to get all of our accounts with debit balances to close out. So we have sales discount, sales returns and allowances, and purchases. We will just paste them over as values only. Why is that not working? I don't know. We'll just paste them. I'll fix these in a minute. And then we also have all of the expenses all the way down through federal income tax expense. We'll copy those, paste them in, and I'm just going to format painter these so they look good again. Every one of these should be indented because they're credited. So I'm going to do that on pause. So there's our list of accounts that have debit balances that will need to be credited. And now we'll just need to grab those amounts for sales discount, returns and allowances. We'll just paste them in. And then all of the expenses, we'll just paste those in too. And we'll format painter them to look good again. And then our income summary debit amount will be now the sum of all of these accounts that had debit balances. So $429,376.63 is the sum of all of those accounts. And these will all be zero in the general ledger after posted now. Okay, so the third entry is to close income summary to retained earnings. So the amount for that will be, we have $5,771.89 debit right now, and if we thought about it, we'll just put it right down here. We have a debit for that amount. We have a debit for this one, $429,376.63, and we have a credit to income summary of $508,297.32. So what we would do is we would find the difference, right? So the 508 minus both of these debits gives us $73,148, which, if you remember, is our net income, which I'm glad that, you know, that calculated out correctly, because we need to close our net income. So income summary needs to be, right now it's a credit balance of $73,148.80, so we'll need to debit it because we have a net income for the net income amount, and that will make income summary a zero balance, and we're going to send that to retained earnings. In our third closing entry, and the final, we can delete these now. That was just to kind of show you that debit versus credit for that account. On the 31st, last closing entry, we are going to close out dividends to retained earnings. So retained earnings will get the debit, which will decrease that account balance, and dividends will get the credit. And if we go back to our trial balance, we can see that dividends has a balance of $12,000 debit, so it needs to be credited to make it zero, and retained earnings will get the debit of $12,000. So there are our closing entries. We have journalized all of these, and obviously at this point you'd go through and post all of them to make these account balances, your income statement accounts, your temporary or nominal accounts, all zero to start your next fiscal period. So that's the purpose of closing entries. You've got to zero out all of these sales and expense accounts, anything that goes on the income statement. Get zeroed out before you start the next fiscal period. That's not the same for balance sheet accounts. Whatever the ending account balance is from this period is the beginning account balance for the next one. They go on. They're permanent accounts. So that's it for the closing entries. Work together 16-4.